back to the channel. So I'm going to talk about lithium, graphite, and what I think they're the best place to invest, given there's going to be so much demand and the supply might not catch up in time. Either way, you want to buy low, sell high. So lithium at the moment was down here. Like, the price is shot down, but it looks like in the future we're definitely going towards electric vehicles, in my opinion. Like, Tesla's getting their cars cheaper, BYD as well. These are two of the most profitable EV companies. CATL, the biggest battery companies, got this new battery that's costs about the same, but gets 20% more range. So every day there's increment by increment coming. Not to mention the increments of people getting solar and batteries at their house, which makes it they can just plug their EV in that when they get it, etc. More Teslas on the road every day. I see so much more Teslas coming around in Perth, Western Australia. So slowly but surely we're going to EVs, and it makes a lot of sense. Like, you plug it in your house, free. Like, imagine we had something that you could cheat the system, get free petrol. Well, you don't need that because you're getting free petrol from the sun every day with an EV. Obviously, it's raining some days. Yes, we know, but most days, depending on where you live. Anyway, so I think we're slowly but surely going to EVs. And I'll actually argue with if you want to argue we're not going to EVs, please argue below. I'd love to argue with you about that. So moving on, GL1. So next, you know that lithium and graphite probably going to be, if you research into batteries, like, they have these new batteries coming out, but they never stack up with the cycle life, cost and everything to the actual one that's working now, which has lithium, has natural graphite in it, etc. So then you got the company, you have to do the rough sums in these guys. So these guys, $300 million to buy, comes to like $80 million cash, and they can spend $400 million. They have to raise the $400 million, so that's going to dilute the share price a bit. Or they can get a loan, it could be more beneficial, not diluting the share price as much. Then they can make, actually at the high price, so when this is at the high price, they can raise $400 million to build the mine, and then make $800 million a year. But current prices, that's about $400 million. So you want to sort of buy low, sell high. The price for these guys has come down a bit since the highs. Was actually near $1. Yeah, but you could get greedy, not even buy into it if you don't want, unless it went ridiculously low. And then you buy in, and then you're probably extra safe. Not extra safe, but your risk to reward is substantially increased if you're getting a lower price. So funny about these guys, they have to raise $400 million to make $400 million a year. LTR, their study, not sure if it's because it's from 2020 and GL1's is from 2023. But these guys spend about the same amount as GL1, tiny bit more. But instead of doing 220,000 tons per year, that's double the tons per year. So spending about the same money, making double the amount. I'm not sure if that's because the study was from 2020. So maybe this could be more, not sure of that. But it looks like they're spending the same amount and making double the money. And they look like they're out in the middle of nowhere, like GL1's project's sort of out in the middle of nowhere. So I'm not sure why their numbers are so much better. Maybe because they've got a bigger pit or something. And then just to do 200,000 more tons per annum, they just have to spend another $66 million. Pre-production costs. So anyway, so 200,000 tons times 2,000, that's $400 million per year, just by spending $66 million. And that's at the base price. If it's at the high price where it was, that's spending $66 million to basically make $800 million per year. Really rough figures, and that's before tax and everything as well. But these figures are rough, but they are correct. Let's look at PLS, what they were making. So they were selling for this much, which is about $4,000, $5,000 profit per ton, times this many tons, and that's why they have this much cash up here. Where is it? That's why they made a net profit of like $1.24 billion, because they're selling it up at this price and just selling so many tons. And yes, that's lithium. Probably their price came down. So that's what I'll say about lithium. You have to do the rough figures. Know that right now the price has come down a bit. But I suggest in the future, I wouldn't be surprised if this goes back up there, given the shortage versus the demand, oncoming demand, especially if Tesla and BYD are getting in the cars even cheaper, especially when utes and vans come out, because that's going to be more demand, tradespeople. I just speak because I'm a tradesman, so I just think like, I don't want to buy a car, I want to buy like a ute or something. And so do a lot of people. Utes are very popular in Australia, probably in the US, probably everywhere. Yeah, so that's lithium. And then another important thing in the sector that hasn't gone up, so we'll go back to this lithium chart. So this graphite we could be here with graphite now. So this was lithium. There was a bit of demand, but supply could keep up with it. Then demand way outwent supply. Price went crazy. So with natural graphite, we could be at that stage now because we've got enough at the moment, but when that demand kicks in, when Tesla gets a car even cheaper, if they do, it's going to be so much demand so much demand for natural graphite. So natural graphite, currently China has got that. Well, graphite is natural or synthetic, but China is the basically owner of everything. Everything's pretty much done in China, but everyone around the world is getting into gear to bring a graphite project to line. Yeah, so this one could be good. iTech Minerals. Basically, sorry to blabber on, but CXO, the best opportunity, if something you want to aim for is CXO. Reason being, they were in the right place, right time. GL1 has spent $400 million to make $400 million a year. These guys only had to raise $100 million. So they didn't have to dilute it all. They just got a loan for that. And they just delivered the first bit of shipment now. So actually selling the spodumene, which they'll be getting the $2,000, making roughly $2,000 profit per ton. And that's why they did so well, because the nearer capital city didn't cost a lot to build the mine, and it was just in the sweet spot. Very good investment. So graphite, natural graphite, it probably won't go as high as lithium, probably because there's more natural graphite projects around. Like lithium comes in grades of 1%, natural graphite goes from like 10 to 30%, so probably more on the ground. And people say it's not going to be the natural graphite that's in short supply, it's going to be the processed natural graphite. So natural graphite, you get out of the ground, roll into balls, and then you coat it, and that's the stuff that's going to be in demand. So there's a lot of it out of the ground, but really the processed graphite is probably where the shortfall is going to lie. But this company looks to be getting out of the ground and doing making the spears, coating, etc. $28 million for a company that, when this happens to graphite, if it goes half as good as lithium did, this company could spend probably $100 million and maybe make $400 million per year, meaning could go similar to CXO, not a guarantee, but I'm guessing people didn't think CXO was going to make, people thought here CXO might make $100 million a year. Fast forward, guess what, CXO is not making $100 million a year, they're making $400 million a year. So this could be ITM and a lot of other graphite companies. So the good thing about ITM, they're going to have a low capex, looks like it, because they're near existing infrastructure. They've got a big resource, meaning mine life won't be an issue. And then in South Australia, it's all renewables. So that's iTech Minerals. Could be wrong, the stock could go to nothing, but it's a good pick. Another one with natural graphite is Walkabout. These guys don't have to raise any more money. They basically built the mine. They've got loans for it. They probably have to pay a bit of the loans back, but they're not going to dilute anymore. And they say if they get it right, they're going to make $50 million EBITDA and then $25 million after tax and costs. For a company you can buy today for 60, it's actually more. It's probably like 70 or 80 million. And that's before the graphite shortfall, so they're making good money at the moment because they're not selling into the battery market. Actually, they're selling to other markets for graphite. But I'm sure if the battery market kicks off and they can make 3 times the price, they're going to switch to it. But anyway, they're going to be making money possibly at the end of this year. So that's why they're pretty decent in my opinion. We'll just keep going through other ones. So basically a lot of these projects, you want something with a big mine life because you can, like there's so many companies on offer, you're going to choose a big mine life one over not a big mine life. Vault Resources, pretty much the same thing. Big thing in Africa. They can spend for $200 million and make $200 million in EBITDA per year. And if a graphite shortfall comes, tripling the price, then guess what? It's tripled the EBITDA. And they've also got a working mine in Ukraine to shut down with the war. But if that comes online, they can easily make $100 million from that by not spending much money because it's already built. Yes, that's VRC. Look into them more. They're pretty good. And BlackRock, pretty good company. They've actually got a deal with POSCO, who's like POSCO does deals with lithium companies and stuff to use their stuff. So they got a deal with POSCO, I think about $150 million. Not sure the cash, but they can spend $100 million and then make $100 million per year, and then they're going to do that times 4. So they do the first stage, then demand kicks in. They spend $100 million to upgrade the tons per annum, and they got 14 million tons in the ground, which is a never-ending mine life pretty much. So they're pretty decent, but the price is quite high, so maybe less risky but less reward as well, because they have to raise 100 million and you have to buy them for 150 million. Bear in mind, if graphite shortfall comes in, it makes things go crazy. Could be worth quite a lot more, just like any other natural graphite stock that's really going to get in production. So you always want to choose something that gets in production, because then you can basically hold until it gets into production, and by that time the price would have gone crazy anyway. But if some stupid reason didn't, you'd be getting a dividend, like Pilbara Minerals paying out a dividend. That's a pretty obvious thing, but anyway. So do your research, but there's a lot of graphite companies out there. You want something with low capex. So you want a big mine life, low capex, so you don't have to dilute the share price to get the money. Probably a low starting price, like iTech Minerals only 30 million. They have massive projects. They have to confirm they go into the battery. They have a little project, and that stuff goes in the battery, and only 20 kilometers away is their bigger projects, which they're just doing the metallurgy to confirm it goes in the battery. And only 30 million. So if this company goes well, a lot of X's there. Seems like it will. They're actually near RNU, which RNU has already became a $500 million company. They've done more work. They've actually got a loan from the government, so they're not going to have to dilute so much. That's why they've gone very well as well. But their neighbor, very close neighbor, is ITM, who could follow in their footsteps. Remember, if someone announces a deal, like someone like POSCO had a deal with these guys, that's where the money's made. When that announcement comes out, that goes up 60%, then people are like, oh, this is going to get into production, less risk. So if you pick it before those announcements comes out, like if this gets a free loan from the government, it's going to go nuts. If it gets a offtake agreement, it's going to go up. And it seems likely it will, because it's a good project. Obviously, I have to confirm metallurgy on the big things, but they have big mine life, very good location in South Australia, which is 100% renewables. So good company there. And there are other good companies, but I see ITM is quite above the rest. And what other projects? So I'll leave it at that. Actually, I'll just go to the thing and see if are there any other companies like Rainy Nord. If you're still watching this video, I'm not sure if you're a loser or maybe you just like graphite. But anyway, we'll keep going to this. This is not a limited supply. Actually, one more company, IG6. These guys don't have a massive mine life yet, but it is growing. And they've actually got a pilot plant to get it out of the ground, make the speedballs, and coat them. So they're going to be meeting that. Although the plan's very small at first. Who knows? I'm actually not very hopeful on them, but they could come out of nowhere and pull it off. They got government support already. So it could be decent there. And I think they're about 30 million. Yes, it could be a good one. Northern Graphite. So these guys here, I think they're about 70 million. And they got a lot of stuff they're already producing on a small scale, and they got big talks of making battery anode, like turning the graphite into the battery thing. So they're worth looking to. They got a few projects and come online with not spending much money because they're like just restarting projects, etc. Don't know about these ones, so no. I think someone else owns this project now. Magnus, already quite large, so I think you've probably missed out on returns and share price already because they've already had all the good announcements. Vault Resources, I think, is pretty good. Could be just a few announcements away. 23 million tons in the ground, so huge mine life. Graphics, don't know anything about. Don't know. Renscore, I said, very good projects. Already pretty grown, but will grow more. Yes, I'm probably going to get... Yeah, Renscore is the best project. Okay, thank you. Renscore is the best. These guys, decent as well. They got really good operational costs, apparently. Feasibility study, good amount of tons. So you probably want at least 4 million tons in the ground or more. BlackRock here. So, yeah, heaps of tons in the ground. This could be very good, BlackRock. Already got a thing with POSCO. So I'm guessing these battery players want the same stuff coming out of the ground, so they don't have to change the metallurgy halfway. So they can use this same sort of stuff coming out of the ground, maybe from this guy. Don't know. Ecograph. They're recycling, are they, in Australia? I'm not sure. Zero, these guys were in production, not even making any money, doing a lot of tons, but they need the graphite price to rise up a bit to make some money. But look at how much tons are going on the ground. Huge. And they're going downstream as well. Walkabout, 4.5 million. And all these companies can drill and find more tons. They're just not going to waste the money doing that now they don't have to, diluting the share price for no reason, but they've already got 20-year mine life. So these guys are real good. Like I said, 70 million to buy them. They could make $25 million a year after costs. And guess what? If they're doing that, making $25 million a year, they're pretty soon going to double production, and that will be 50 million. Graphite shortfall comes in, could be even double that. Trident Minerals, they got this mine taken off them. Then they got this one up here, which has a lot more tons of the ground. So yeah, this one, pretty good. I think it's in the middle of nowhere, but pretty good, pretty high grade. Yeah, I'm just actually too tired to continue. These guys here, they're going to spend 1.1 billion with their partner, and they'll make $500 million a year. And they get a huge resource with really high grade in a place which has hydroelectricity, so they can basically process all the graphite on hydroelectricity. And really good. So some of these zero resources, they're all in diesel, so that's really cutting into the cost. So if you're on the renewables or hydro, you're a step ahead. Tulga, really good location, really good grade, hydroelectricity, but they've already grown quite a lot, although they probably will go very well in the future. All these companies, when that graphite price kicks in, if it does, they're going to go pretty well. And not all the companies are on here, there's a few others. Can't remember on the top of my head. But anyway, that's it for me. If you're going to say your company is great, give me every figure in the comments. Say the market cap, how much cash they have, how much they have to spend to build a mine, then how much they get in EBITDA. I don't want to hear like, oh, my company is the best. Give me the raw figures and we'll compare. You can easily compare it then. Thanks for watching and see you in the next one.